Welcome, everyone. This is Jimmy, your favorite NLP coach. Today we have a legend. We have big chats in the room, in the house, talking about a lot of topics. We're going to talk about trading psychology, about managing your portfolio, and risk management. Big chats, how are you doing?
I'm doing good, man. Thanks for having me. I don't like being called a legend. It's like that's a high bar. It's like now everything I have to do, it needs to be legendary. That's a very high bar you've set for me.
Oh, my dear. Sorry for putting unnecessary pressure, but nonetheless, people, some of them, they do regard you as a legend. So I can't do nothing about that. Sorry, big chat.
Hmm.
Hey guys, today we're gonna talk about risk management, about trading psychology, about pitfalls. If you have any questions about that, please drop them in the chat, big chats, and it is more than happy to address them. So, big chats, as we know, a lot of people they got wrecked. We both know, like we've seen the price action. Bitcoin went basically from 70K to the price level it is now,
Yeah.
making lower lows. People are actually they're burnt. Um, if you could like give them a quick advice, what would it be if people are burnt and are about to give up? Because I think we are now in this stage of the market, in this
hmm
phase of the market where people are about to, to give up. Um,
I think it's okay to give up. I think it's okay. I think it's okay to take a break and walk away. Like if you're burned and you're burned out and you're defeated, like just you don't have to like keep going. You can take a break and maybe go like read a textbook. I think about, you know, I'm writing about this kind of a condensed version of my trading story for book three, the Trading Quotes book, and I talk about, when I had these big devastating losses to my bankroll, I would walk away and I'd read a textbook, and I would come back feeling stronger, more confident, and having added, some new skill to my tool belt. So it's okay to walk away. It's okay to take a break. Don't force yourself, especially when you're emotionally compromised. I think you need to come back fresh and ready to try again, because if you're just, if you're feeling like you're going to fail, you'll find a way to fail. So you have to kind of reset everything.
That makes so much sense, chats.
Yeah.
Really, uh, because I also believe that it's actually not a really smart idea to continue while you're burnt out.
Yeah.
And this also brings me to the topic of confidence,
Yeah.
especially people who are burnt out. They maybe have some competence, but they cannot really fully tap into their competences because
Yeah.
there's no confidence.
Yeah.
You said like reading a book is one way of boosting your confidence
Mhm.
and detaching yourself from maybe like the real trading. What else would you tell them to
Yeah.
level up their game and to boost their own self-esteem and confidence?
Well, I mean, you have to think about yourself. You have to have kind of a whole body, a whole mind approach. And we talked a little bit before the show, so I'm sure you think about these things as well. If your sleep sucks, so will your trading, right? So are you eating right? Are you exercising? Are you drinking too much? It's just like anything else. You need to be at your best to perform your best. So, if you're just every day hungover, you're not going to trade well. If you just don't feel good about yourself and your life, you're not going to trade well. So you have to work in yourself and kind of come to the battle with the best version of yourself that you can be, or at least ideally a better version of who you were the day before. So it's not just what you do while you're at the computer or on your phone and your tablet, your laptop, whatever you're using to trade. It's the stuff you're doing when you're not trading. And are you doing things that move you towards focus and move you towards discipline? Um, one of my quotes is one of the best predictors of a trader's success is the ability to tell yourself no, right? The ability to delay gratification, the ability to say, I'm not going to do this. take that extra scoop of ice cream, or I'm not gonna, do this thing I know I shouldn't do. You have to have discipline. And so discipline with your personal life will translate into discipline and success in your trading life.
Yeah, I so much agree, Jet. I have a general rule, and that's knowing when not to trade is
Yeah.
more important than knowing when to trade.
Hmm.
I have
Pretty good.
some personal rules for myself when I'm stressed out. I'm also a father. I have two kids, and
Good for you.
yeah, it's really nice to have kids, but it also
Yeah.
comes sometimes with stress and
Yeah. Yeah.
adversities, and it's also really energy consuming.
Hmm.
So I know when I have the kids around me, I don't trade because I know I'm really vulnerable for a lot of pitfalls and mistakes. But
Yeah.
also when I'm tired, especially after 11 o'clock p.m., I just don't trade because I know my win rate overall is really bad. In all my trades that I do after 11 p.m., it blurs my critical thinking, my logical thinking, and I think everyone should have like his own personal rule when to trade and when not to trade. And what you told me just now about the different areas of your life,
Hmm.
they basically also can impact your trading. For example, if you're really disciplined in your diet or in fitness or gaining knowledge or whatsoever, that's maybe something also you can utilize in trading. Is
Hmm.
that something you would agree on?
No, absolutely. I mean, it's just like I said earlier, it's a whole body, a whole person approach. It's just any skill. It's not trading. I mean, if you were trying to pick up, any skill that is difficult, anything you have to perform at, you just got to be the best version of yourself to give yourself a chance.
Yeah, that's really so true. Um, for the audience, people, Big Chat is giving a lot of alpha here. I would say like make notes. I always say joining any live stream, it's good. It tells something about you. It tells me at least that you're really serious about trading, trading psychology, TA, and all of that. But please do make notes. Do make notes and try to work at least on one thing after the live stream. Have at least one thing you want to work on. If not, then this might be a waste of time. Um, as in, you want to get this knowledge and translate this into action because that's what will give you a real edge. So, guys, I would say make notes and ask your questions in the comments.
Absolutely, take advantage. I mean, you're going to get out of trading what you put into it, and take advantage of when you have a chance to ask someone a question, someone who is willing to answer and wants to answer and wants to teach and wants to engage. So I really like these congresses are great. I like what Burb does. You have a great team, so take advantage.
Yeah, for sure. And for the people who don't know, but Chet has also a psychology background. He has written two books already. Writing now his third book. One of his book was Trading Wisdom. So there's a lot of wisdom to come. So Big Chat, talking about wisdom.
Hmm.
Wisdom often also comes with experience. And I know you have been trading for a long time. What kind of pitfalls do you really see in the crypto traders generally?
Kind of pitfalls. So that's an interesting question. Well, I think not just crypto traders. One thing is kind of across any asset class, for a trader is the fact that it's difficult to admit when you're wrong, right? Like we tend to be stubborn, and we tend to, come in with a trading idea, and when that trading idea fails, instead of admitting that failure or taking the loss, we just hold on, and then we end up adding to the idea. We end up adding to a failed idea, and that's not just crypto. I think that's across really any asset class. So that's a really dangerous habit. And I think that's something. If it's not something you're doing, you should at least try to be aware of it and then work on avoiding doing that in the future. So being stubborn and like the best traders are quick to realize when they are wrong, and that's really really important. And there's no shame in being wrong, because you're probably only going to win 30-40% of your trades, maybe 50% if you're really lucky. and it's really kind of making those losing trades as small as possible, so the winning trades can make up for it. Just don't ride a losing trade. Don't add to a loser. That's really going to set you back quite a bit.
Yeah, that's totally true. It's also what I see. People who have big problems with admitting they are wrong. Most often, it's their ego and their self-esteem trying to, avoid people to admit that they are wrong, and it's only a catalyst for, for making for more mistakes, basically. So how was your process in, as in, to admit when you were wrong?
It's still hard. I mean, I still, and it's hard too, especially if you have a large position size. Like if you have a really big trade, even taking a small percentage loss of a big position is hard, right? So that kind of boils down to the concept that the smaller your position, the easier it is to manage it, right? So that little trick can be kind of a cheat code, in many ways, to unlocking the success that some traders are lacking, because you may have a good plan, but then when it comes time to execute it, you kind of get nervous, you kind of freak out a little bit, and you get uncomfortable because it's too large a position. So smaller positions are easier to manage, and when I use, that's why a lot of my positions are pretty small. I like to grind it out. And it makes it easy for me to say, "Oh, I lost. Like, fine. I tried this. It didn't work. Fine. Like, no problem." I'm more concerned with my methodology. Did I come with a sound methodology? Did I apply that methodology? Did I stick to my plan, or did I deviate? And that's kind of what I just kind of continue to focus on. I mean, coming up with a good trading plan is not that hard. You have a well-established level that the price is interacting with. And then the price will do something, maybe flip that level, and then, okay, you can take a trade, and now you can define your risk, based on the price interaction with that level, and that's a fine plan. But how do you handle getting wicked out and stopped out? How do you handle, like, too big a position size? Do you oversize that first bullet? So there's a lot of trial and error, to applying like a good trading idea. But really, it just comes down to, like I said earlier, that cheat code really is smaller positions are easier to manage. So I think that's maybe the most important takeaway of what I just said in the last like three or 4 minutes.
Yeah, it makes it's so true. I think, generally speaking, like a smaller position size also lowers the volume of emotions, and
Yeah,
it
yeah.
makes it easier to manage that. Um,
Yeah, if
what
you
I
enter a position, Jimmy, and if you enter into a position and you immediately feel uncomfortable, you have too much, but it's too big a position,
Yeah.
right? And something's wrong. Like, you got to pay attention to that inner voice, that inner monologue. If you enter a trade and you just don't feel good, like, just get out of the trade and just, like, whoa, what happened? And either you're buying into some FOMO pump, or you're just like buying the straight blood with no real reason, no price structure, or it's just too large a position. I mean, you've done something wrong. So it's really important to pay attention to how you're feeling when you enter the trade.
Yeah, that makes completely sense. It's about position sizing. That's really true. What other, pitfalls do you see in trade, like, as in, like, the common mistakes they make?
I think one thing that it's really tempting to do is to like, build up an idea of someone, right? So you follow someone on Twitter or on social media, Discord or whatever, Telegram, and you think this person's a master trader. They're a master guru. And, especially if you see them just posting a lot of winners, that's all they do. They make winners. And so what you end up doing is you kind of end up like convincing yourself, all I have to do is follow this next person's trade. Right. And then so what you end up doing is just, your fortune's going to rise or fall with theirs, right? You have no idea what their financial situation is. They could be taking wild trades and not care what happens. So one thing a lot of people do is they fall into a trap where they're just waiting for someone they follow to give them an idea so they can go trade. And it's like, no, you have to be You should be the source of all your trade ideas, right? They need to come from your watch list, right? They need to come from things you've studied and you have muscle memory in. And then that's the only real way to apply your risk. So it's just you got to avoid, um, falling in love with someone you follow and thinking they're a genius, and then just kind of waiting for them to tell you when to risk your money. That's just a really bad strategy.
Yeah, that's indeed a very bad strategy.
Yeah.
So I always tell people, like, be careful who you're following, especially on crypto Twitter, and make your own decisions, make your own trades, because eventually nobody can spoon feed you forever. I think, like, one of the biggest regrets people now have is, especially, are actually, like, the current backholders, or people who are not able to secure their profits during the bull market. Do you have any opinion about that? Why people have a hard time in, locking in the profits?
Yeah, I mean, you think, there's a lot of a bunch of thoughts in that, but it's because when we were at 60K, everyone was talking about 100K, and oftentimes when people ask me, like, what's your target? A lot of the time I say, like, I really don't use targets. I mean, of course you have to have a general idea, from a risk reward perspective when you're structuring a trade, minimum 3 to 1, based on classical charting, that. But if you think about a target, you're going to spend all your time focusing on where you think the price is going to be in the future, and all of a sudden, you're not even paying attention to what's happening right now. You're not even paying attention to the current price interaction with support and resistance. You're going to avoid, momentum clues of either strengthening or weakening trend that may go against your trade. Um, for me, what I like to do is, like, I'm always moving my stop loss up and I'm moving it into profit. So I'm never going to, or almost never, or ideally, never going to just, like, take no profit. If I have a good trade idea, really as early as I can, I get my stop loss into at least break even, and then I'll move it up into profit. If it's a long, I'll move it up, every time the price recaptures, like a lost support level, for example. So I would say, to kind of be more succinct, I would say you need to focus less on targets, right? Because they're going to take your focus away from right now. Like, if you look at the top in November, I mean, there were a ton of warning signs. I've talked about them with Burb. I've talked about it on YouTube and Twitter. I mean, you could see the top coming. It wasn't like nobody really should have been caught off guard about the top. So in that situation, you have to, you move your stop loss up, right, into profit. So you'll at least will gain some benefit of a good idea. Like, you have to pay yourself for a good idea. I mean, that's really important.
I,
So that's what I would say.
I think that what you just said about the focus less on targets, I think this is crucial,
Yeah. Yeah.
because it also prevents you to fall victim to recency bias. Because at the time when Bitcoin was trading at 60K, everyone was yelling 100K and even 150K, and even higher targets. Then a voice gets created in our head, and every time when we want to lock in the profits, then the voice is telling us, well, what if it goes even higher? What if it goes even higher? And the only thing you see from them is higher targets. And I think focusing less on targets is really, really a good tip.
It's true. It's true, brother. You got to, that's why just everything I do is just about trying to stay in the moment and trying to just be ready. I mean, like, technical analysis is about, at its root, it's a it's a study of historical price data to identify a trend, and then, ideally to understand the chart so you can understand where that trend strengthens or weakens. And that's so important. That's kind of should be the foundation of any kind of a technical analysis trading strategy. So targets are just going to, like, it's like news. It's like trading on news. It's like trading on a story. You're almost looking for an excuse. You're almost looking to give yourself an excuse to avoid paying attention to a chart breakdown. Oh, it's okay. The price lost support. That's okay because, the CEO had lunch with, some famous celebrity. Like, who
Yeah.
cares? None of that matters. So it's just got to be the price. You got to let that filter out, everything outside of the chart. And, that's how I try to approach it.
Yeah, that's I think a really good approach, and also about like trading your stops is also a really good approach because you just force yourself to, if you get stopped out, then you get stopped out in profit, and that's also a good strategy. It's also what I used in the bull markets to trail the stops, and sometimes I do get stopped out, and then it continues, to the upside, but at least I'm my justification is I'm in profit, and some trades they just continue going up, and some trades not. But at the bottom line, like at the it's still profitable. But it's sometimes like the sentiment that can shift people bias in just one direction. So it's only bullish and or only bearish. And I believe that people they have a really hard time in shifting that bias. They're actually just that people they are um, sometimes they are in love with their gurus, but they are maybe even deeply in love with their own biases. What would you tell them to people who find it really difficult to switch from bias? Uh,
From
you
their
know,
bias, right?
yeah, yeah,
I just think you're going to lose your money in trading. I mean, you can't, your opinion should only be as strong as your ability to react to new information, right? What is that phrase? Peter Brandt, or maybe other people had it where some, strong opinions weakly held.
mm,
We get new data every, in theory, every second, but you get new data all the time, and you can't just like whatever your bias is, it's a theory about things outside the chart and what they should do to the chart. Well, just watch the chart. That's the answer. Like if what you think matters, you'll see the price do something. It's either going to hold support or not. It's either going to break resistance or not. Holding on to a bias is going to, it's going to cause you to lose your money, and we all have to go through it. And then ideally, you take the pain of that big loss and then use that to encourage you to never have it happen again, right? You have to, some people just have to learn from the experience of losing big money because they held on to it, because they stuck to their bias.
yeah,
But hopefully some people don't have to suffer through that. But they probably will have to, they probably
yeah,
will have to.
yeah. Hey, talking about technical analysis. Do you have any like? Do you often use like certain classical patterns, and do you have any opinion about that?
What's a classical pattern? No, I'm just kidding. Yeah, I mean, for me, it's not necessarily about a pattern. Well, a couple things. For me, it's horizontal structures are really important to me, right? So I like to play patterns with a well-defined, like for example, head and shoulders, right? You could play head and shoulders, with a descending neck base or an ascending neck base. I like to play well-defined head and shoulder and patterns with a horizontal line, neck base, right? It's much easier to define a breakout. It's much easier to define, when a pattern completes or when it invalidates, right, on that right shoulder failure. So, I look at patterns with well-defined horizontal structure, like an ascending triangle, a descending triangle, even broadening patterns with a horizontal zone. So, in terms of like which patterns, it's not even for me, it's not about a pattern. It's just about a well-defined level. I'm looking for the price to establish a level for me to the point where it's very clear what to do. It's clear that the price should reject here because it's rejected here the last 5 times, the last 6 times. Right now, if it flips that level, I know I can go long because the price is telling you something. So it's not like about the pattern. It's about how well defined a level is, and that is what you're structuring your trade on, right? And like patterns, not rarely does price action fit into an exact pattern, right? We get all hung up on naming it. Is it a bear pennant or is it a bear flag? Who cares? It's bearish consolidation, right? It's consolidation after a move down, which is likely to continue, right, in the direction of the trend. So we get hung up on naming patterns rather than like learning how to trade them or learning how to trade, more importantly, the structure the levels, that those patterns are very loosely approximating.
Yeah, I mean, eventually it's all about, of course, like the context and how to trade them, and not so much the names. And if so
Yeah,
that
don't we get hung up on names? You see it all the time, right? People are all hung up on, no, it's this and no, it's that, but nobody knows how to trade it,
yeah,
right?
yeah. Then I mean, then what kind of use does a classical pattern has if you don't trade up on it? That's also very true.
That's it, brother. That's it, man. But there's different ways to do it. You have to find a style that works for you. I mean, there's some wonderful traders who trade based on technical analysis, based on diagonals. I try not to do that because, for me, a diagonal trend line, it's not like about the line, it's about the trend. It's just showing you a general, price direction. But I'll use that diagonal to alert me to a horizontal zone. I'll use that zone to structure my risk. But it's really about finding your style. So, even people watching right now, they can think I'm an expert, but like this isn't the only way to do it. I'm speaking from experience, what I've studied, what Jimmy and I have studied, in CMT, what makes sense to us. But you also should experiment a little bit, and then because you need to learn from experience, you need your own muscle memory in order to succeed. So how do you get that? How do you get muscle memory? Right, Jimmy? How do you get muscle memory without going completely bankrupt? How do you get muscle memory without completely destroying your bankroll? Position size. Really, really small positions. You need a lot of experience. Like people start out, they say, brand new trader. I'm gonna learn how to trade. I've saved up $5,000. I'm gonna go learn to trade. Well, it's all gone. Like 2 months later, because what did they do? They tried like 5 $1,000 positions.
Wow.
They should have been doing like $25, $50 positions.
Yeah.
Tiny positions. You need experience, right? So you gotta come in with realistic expectations of how long it's going to take you to learn how to trade, and it's likely going to be many years.
Yeah, I mean, that's really so true.
Yeah.
The moment people think about trading or crypto, it's only making money, and there's no focus on the process at all.
Yeah.
And
That's it.
and I think that one of the biggest mistakes people make, maybe subconsciously, is they attach their own P&Ls to their self-esteem. So P&L goes up, self-esteem goes up. P&L goes down, self-esteem goes down. But I personally, I don't think this is the right way, because then there's something else outside of your control that's basically determining your self-esteem, which is completely wrong. And as you said, if someone opens a trading account, and just starts with $100 or maybe $200 and applies like risk management, and does maybe, let's say, 50 trades or 100 trades, that's when someone makes real good muscle memory. And as they say, like, repetition is the mother of all skill. It's really true. But for that to feel, I think, to feel comfortable in that, someone should really detach himself as much as possible from his P&L, because a P&L is just a number. I think that eventually what a trader needs is a certain set of skills, but also a behavior that he just repeats over and over and over again, without too much focus on that dirty P&L.
Yeah, it just owns you, right? When all you do is look at just your bankroll, like the top line number. Like you're not trading the highest the bankroll's ever been. You just have to take it trade by trade and trade idea by trade idea, and you have to practice using your discipline. You have to practice applying your discipline, and you have to learn how to love getting stopped out, because it's preventing you from taking a big loss. Every time you get stopped out, you've protected the rest of your money, and now you have a potential lesson to learn. You say, "Oh, great! Now let me go figure out what lesson I need to learn from this trade." It's not about I need to get my bankroll back to where it was before. I mean, that will happen if you improve your skills and you apply your risk judiciously, or define your risk judiciously. Just less time, and and that's the thing with you see your bankroll and the position is red. And so some people will refuse to close the position when it's red. I'm going to wait. I'll just wait a little bit till it goes up and it's green, and then I can close it.
Yeah,
Right?
yeah, that's so right, and that's really poor risk management. From loss aversion bias, we know that we
Yeah.
consider a loss 3 times more significant than a gain. So if you lose $100, you basically need to make $300 to make up for that psychological, for that mental pain. So it's also one of the key mistakes, I think, right?
Yeah.
Big chats, that people, they are not able to close their losing positions in
That's
a
it.
it's easy as that, but it's so damn difficult for a lot of even for me. I mean, there's also this voice that's telling me, what if it goes up, what if it goes up, what if it goes up? But then, somehow, down on the line, there needs to be this mental strength that inspires you. Just cut the loss and let your winners run, because I think most
Mhm.
people, they do it exactly the opposite.
Yeah. That's true. That's true. They get a little profit and then they take it, and then they refuse to cut the loser. What if it goes up, right? It's a trap we fall into where we convince ourselves that we're going to miss the bottom, right? Well, what if it goes up? Like take something where, let's say it's at like $12, and you have it in your mind that it's going to be, $100 one day, right? That's your target, and you're just convinced because of whatever someone said to you in the Telegram room, and you don't want to sell it, and let's say, $15 was like a multi-year support. Okay. And it just broke down and now it's at 12. And, people are like, I don't want to sell here because I don't want to miss the bottom. So now they're holding. Now it's 9, right? I don't want to sell. Now it's 8, right?
Yeah.
If it's going to go to 100, it's going to have to get back up above 15, the lost support level. So, like, you have to take a loss. If your trading idea failed and you're still holding on to a loser, you should take the loss. You're never going to miss the bottom, because if it's going to get to your whatever, target level you think it's going to go to, it still has to recapture lost support, right? All
Yeah.
you have to do, like, for example, Bitcoin right now, if it's going to go to 50K, it has to flip 18.2K, right? Then it has to flip the daily MA200. Then it has to flip 28K. Like, it's going to go through all these key checkpoints. So it's a choice to miss the move on the way up, because you'll have so many options to do it. Like, the trend will say to you, okay, now I'm strengthening. Okay, now I'm strengthening even more. Oh, I just strengthened even more. Okay, go with it, right? So we need to avoid convincing ourselves that we're helpless, right? We need to avoid convincing ourselves that the price is going to do all this crazy stuff and we'll be helpless and we're going to miss the bottom. That is an illusion, right? Bottoms are slow. They take time to form, and they will give you multiple chances to start to build a position. So it's a complete illusion.
Yeah, it is. It really is.
Yeah.
I often, the bottom is in when it looks bottomless. So when
That's
people
pretty
get it,
good. That's a pretty good quote.
yeah, I just made it up myself
Bottom is
yesterday.
in when it looks bottomless. I like that. I'm gonna steal that.
No, it's not stealing. Well, but yeah, that's really true. Yeah, guys, listeners, there is a secret code on the screen. There's some things you can win. We do everyday giveaways. You see the secret code, and I'm not gonna say it. Oh, someone told me it's big chats in capital letters. That's the secret code. There's a Gleam link URL. Go to it, fill in some details, and you might win some nice goodies, really nice goodies. Hey, big chat. What about you? Show us some charts and
Some dance moves? No,
yeah,
sorry.
and
Go.
some
No,
dance
I'm
moves.
just kidding. Go ahead. Go ahead. I'm just kidding.
Let
You want to
me.
see charts?
Yeah,
Sure.
I think people are happy to see some charts. Yes.
Sure. What would you like to look at?
Okay. I think it's really interesting to see now Bitcoin, especially now we are heading into another FOMC minutes.
When is that? When is that today?
Yeah, it's 7 o'clock UTC, so 1 hour from now.
Oh, okay.
So
And you think that's going to have? I mean, I feel like the correlation to equities has kind of been broken. I just don't know that like that's going to do anything to the Bitcoin chart.
yeah. So, but what if like you mean like the correlation is broken?
Yeah, like it used to be for a while, maybe after June bottom, and we
Yeah.
were sideways for a while. It was like, why even remember a lot of the reply guys? Why even look at the Bitcoin chart? Because it's just going to depend on what the SPY does.
Yeah.
But hasn't been the case for a while. We've been decoupling, so we have a pretty strong trend. And I don't, like I don't see FOMC anywhere in this chart. I don't think it matters.
Yeah.
Personally, but
Yeah.
I guess what's interesting to talk about is you have, we all know what's going on behind the scenes, and we know about, we've talked many times about how the top formed. We've talked about the price dropping and consolidating, the price dropping and consolidating, and that consolidation was led once the price was able to grab the daily EMA 34. I think I talked about that with Burb last time. And we really see this 140-day range that we just broke down from. We're consolidating below the MA 200, right? It's a downtrend. It's, consolidating below a falling MA 200 simple moving average. So we know what we're looking at, right? So and then, just broad view, you're going to give edge to the bears, because we're in a downtrend. But maybe what's interesting is I put out a tweet and I talked about this, consolidation channels or zones will often morph, will often change into different patterns. So we have initially some type of a symmetrical triangle forming, right? And that symmetrical triangle morphing into a descending triangle, right? But, that doesn't mean it's going to break down. We could break out of this, and then now we're in just like a bare rectangle, right? So these consolidations can take a long time. And one thing I think we want to keep in mind is if you look at the weekly chart, and if you look at, and I'm curious maybe your thoughts on this, because you've got a good technical background as well. I think just the size of this weekly candle, right, and the size of that range break, it's unlikely to consolidate and to resolve in just 1 week, right afterwards. I feel like this type of a large candle, and given what it represents, the 140-day range and just kind of that range break, the size of that move, usually that's going to take at least 2, 3, 4 candles, to resolve. Would you agree with that?
Yeah, I would agree, and I think if it wants to, revisit like the previous support level, of the range, it's not gonna happen in one candle. Not at all. I think it needs multiple attempts to absorb bearish pressure, and also if you would use the volume profile. It's really telling me that like the it's 18.5K level. It's a critical level for bulls to reclaim. I'm not seeing it happen that soon, to be honest.
Yeah, I mean they may do that, and certainly, it would take a while to reclaim that level. I just think we have to condition ourselves. It's just hurry up and wait, right? A lot of the time. And, in many ways, we are action junkies, right? We're traders. We love volatility. In poker, we play too many hands because we're craving action. And we want things to be exciting, but, sometimes they're just going to be boring for a while, and moves need to digest, right? And so I think there's this danger, especially in the early parts of the consolidation here, right? First few days, where we tend to kind of overreact and, let's call bottom now. Now it's bottom. And now we got to this just has to play out and it has to sort out. I mean, sure, it's forming a descending triangle, but like I said, it could break out of it into a larger range and it could do something else. What do? You just simplify it and you say, okay, this is kind of messy. So what do we think? It's kind of messy. All right. I mean, look, you can just see we have more or less the bottom of a support range that was broken, right? And we have the next major support down here, right around 12K.
Yeah, it's obvious one.
So if you want to just play around in the chop zone in the middle, like go for it, right? But you're pushing it. You got to wait for the price to develop. I mean, we are below the prior all-time high. We're below the MA 200. All the moving averages are heading down, right? It's just not good, right? So you don't want to rush into being long. But if you want to be long, you've got a very easy way to do it. Recapture, right? Lost support, right? Or look and see what we do down at the major, demand or support level here.
Mm-hmm.
Time interval, right? In between these attempts, right? Price distance, peak to trough. We have everything we need to understand that this is a very important level, right? The 18 highs, 19
Yeah,
highs,
there's so
2020
much
highs,
confluence
right?
there. Yeah, that's so true. There's so much confluence there.
Yeah,
Yeah,
100%.
yeah.
So
So
that's what I think about it. Yeah.
yeah, so I agree. Like if I would like to long Bitcoin on the high time frame,
Yeah.
it would need to reclaim that level, that the previous support level. Then I
Definitely.
would feel most comfortable with that.
Any questions in the chat? You want to check in the chat, see if there are any interesting questions?
Yeah, there's one question. There are a few questions, but like Hannes asking, like, is it wise to avoid trading on December?
Why December? Like, what does that mean?
Yeah, was also my question. Maybe some seasonality.
Yeah, I mean,
know.
someone actually asked me yesterday something about like, is it true sell in May and go away, right?
Yeah.
But like, whatever, those are like philosophies. When it comes down to it, you're still going to take a trade or execute risk based on what's in front of you, which is the price in relation to support and resistance. So, I don't like this whole thing about narratives and what months we should trade in. I mean, these are all things that are taking you away from the chart.
Yeah.
Right? Have a watch list and then cut that watch list in half and then study what's left, really know those charts and then play those charts and take advantage of moves against the trend and fade those for a profit.
Yeah. 100%. So guys, you have a watch list, cut your half watch list, and set your alerts and your the key levels. People are really interested in Ethereum, which maybe
Never heard of it. So, I mean, look, Ethereum also has a daily descending triangle, but let's kind of mark it up a little bit. We'll kind of walk through what we're looking at. And we also have a downtrend in Ethereum, right? We see what's interesting is we were just rejected here at the daily MA 200, simple moving average, right? We were just rejected here, earlier this month. So we have a downtrend. It was a beautiful uptrend, we see up here. I sold all of my Ethereum above 4,500.
Wow, nice.
I mean, you could see the up thrust, you see it weakening. You saw Bitcoin topping, and I've just been waiting. I did take a long though down here, right? I actually didn't touch it all the way down until we did this ascending triangle. So we have the price breaking down. We have the topping pattern. We have the up thrust. We have the MA 200 underside rejection. You have another loss of price structure here with the break in early May. Pretty weak reaction right here off that May 12th low. Remember that May 12th low in Bitcoin?
Yeah.
Pretty weak reaction here in Ethereum, right? Just kind of reflecting on that right now. And then you have another breakdown, right? Another loss of market structure, boom. And then we drop, decent response, rally to MA 50, MA 20, rejected, higher low, right? MA 20 rejected. And then here, just a little bit of a higher low, sort of breaking the ascending triangle structure, sort of, but more or less holding that rising demand. But what's most important, this is a great example of what we talked about earlier. It's not about like, is this an ascending triangle or not? Does it have the right number of touches? Like, none of that really matters. What matters is you have a well-defined level. This is all you can ever ask for in trading. Even with this rejection here in Friday the 15th, it was nice because it rejected there. It said, okay, now that since it, we'll zoom in, right? So rejected, then rejected again on the 15th. So it's like, wow, I really want to go long if it breaks this level, given how it keeps rejecting there. So you have a really well-defined level. You have a way to, to structure your risk. And then you got a beautiful run, right? You got a beautiful run from the C-Ron. Great question. I'll talk about that. You had a beautiful run from the 1270 range, all the way up to 2K, essentially stalling right about there. Now you say, okay, now this level's pretty well established, right? Because you've got that high, you got that high. So later, down the road, if we bounce at some point, you could go long at 2K. That's still in the cards, right? Rejected, we come back, and we kind of found support somewhere somewhat in the middle, right? Look where we found support on Ethereum here in August. It was kind of in no man's land, right? There's a little bit of action here. You had this wick, but it's kind of in no man's land. You would have expected to come down to here, right? But it didn't. We set our higher low, we bounce, and then there's another bull trap, right? We have another up thrust, another false break. We come back below, and then we found support at the top of the prior ascending triangle. That's called the throwback. The initial bounce set us into a multi-week sideways range, tight Bollinger Band, volatility, contraction of volatility, leading to suggesting that volatility expansion was around the corner, broke out of the range. She kind of clear break top of it, and then boom, MA200 right back to where it was, stopped before.
Yeah,
now we're heading right back down. And now this level's really doesn't matter anymore. Now we've chopped through. We kind of chopped through the 1270 level. You can't really use that as a trade anymore. So what do we do with Ethereum, right? Okay, I'll go long if we get back up above. You say, all right, I'll go long above 1420. Why? Recapture that low and recapture these highs here, right above that market structure. So you've got that marked. You know where you would go. And then ideally at that point, you might even be flipping the MA200. It also would be a good spot to short if the price bounced into it, right? Because you have the confluence of the MA200 and this reasonably well-defined horizontal zone. In the meantime, I'm just looking down here, 1,000 psychological level, see what it does there. If that fails, we just zoom out and we say, where are we looking? Maybe right around there, right around, $300, $400, $500, right? So if we lose here right around 1,000, there's some support in here. Is it here? Is it here? I think it's most well-defined generally in this area. I would really, really, really get interested down there, right? So it's my kind of big picture view on Ethereum. EMA, MA. I have if you go to my YouTube at Ched's Trading, I have a masterclass webinar playlist and it goes through this. But an exponential moving average means it's more sensitive to price, the most recent price action, right? So EMA, exponential moving average. What that means is, for example, the green line is an 8 EMA. Some people use 12 and 26. I use 8 and 34. Some people use 8, 21, 34. 21 is a little bit too much because I have the MA20, the simple with the middle Bollinger. But in any case, an exponential moving average means it's more sensitive to short-term price movement. So the most recent candle, so in 8 periods, the most recent candle has more weighting than the 8th, the 7th, 6th, 5th candle, right? So every candle goes back has a little bit less weighting, and that means it's more sensitive. So some people use like a 200 EMA, and for me, that's like really weird, goofy technical analysis, right? A 200 MA makes no sense. Like, why would you care? Why would you want that the first candle be more sensitive than the 200th candle? The whole point of an exponential moving average is to be more reactive to short-term price movement. And if you're using a longer moving average, it should be a simple and equal weighted moving average like the MA200 or the MA50, simple moving average 50, right? So you want to use EMAs for short-term moving averages, 5, 10, 15, 8, 12, 26. But once you get past 50, it really makes no sense. Again, in my opinion, in the way I've studied and what's important, what makes sense to me, above 50, you want to start using a simple moving average. So the rule of thumb is shorter term, exponential, right? Longer term would be simple. That's the difference of EMA to SMA or simple or moving average.
Make the notes, guys. Make the notes. Short term EMAs, long term MAs. And I would also say try it out, guys. Use the EMA and see how it reacts with price, right? Big Jets. That's maybe the best way for people also to find out what to use in what kind of situations.
Absolutely, you got to find out what works for you. I mean, if we all have the same setup, then it wouldn't work. And there's one of my quotes is like, we shouldn't get upset. And I'm sure you've experienced this, Jimmy. It's like, you shouldn't get upset when someone else has a different opinion than you, right?
No.
Because if someone else different, like if we all had the same opinion, like the price would never move, Like if we all agreed on what it was supposed to be worth, it would just be that price and it would be nothing going on. There'd be no trading, right? So there have to be different styles of analysis. There have to be, different methods and different ways to do things, but we just teach what we know that works for us. And then you find the style that works for you.
Yeah, that's really true. You need, guys, especially with TA, just throw everything to the wall and just see what sticks and what doesn't stick. What sticks, use it. What doesn't stick, don't use it. Let other people use it.
Well, less is more too. I mean, I recommend not using oscillators. Like, don't use the RSI, right? I mean, some people can use it. I don't like to use the RSI, right? Because some people end up just buying because of what they think the RSI is doing. But you don't want to buy in these derivatives, things that are second order information, right? Don't have too many moving averages. You could argue I have too many moving averages, and I'd say you can make a reasonable argument. But I don't use MACD, RSI, stochastics. I don't use all these other things that take my focus away from the price versus support and resistance.
Yeah,
I don't necessarily use Fibonacci's, but I use Fibonacci numbers, 8, 12, 21. Fibonacci analysis is integral for Elliott wave analysis, which I do not use. A lot of people like to draw, Fibonacci ranges to use price targets, 1.68. They look for the golden pocket on retracements. They look at the 50% retracement. That's fine, right? But that's not my method. So I respect people who use that in their analysis, but I don't really use Fibonacci's in my analysis. It gets me to start looking at targets away from the price. I found that it's almost enticing me to look beyond major support and resistance levels. I just look at the candles. I look at the clusters of the candles. I look at what the price is giving me. I just don't really use fibs. On balance volume is an index oscillator, right? You think about what's the RSI, right? You think about what is the RSI, right? The RSI is a bounded oscillator. It has a fixed limit between 0 and 100. The OBV, or the on balance volume, is an index. It's really a running tally of the red and the green volume. On the red candles, you subtract the volume. On the green candles, you add the volume. So, the on balance volume should confirm the trend. We've had some really wonderful warning signs using the on balance volume for Bitcoin, for example, right? So, Bitcoin, for example, we see here we had a double negative divergence where the price established. Again, we're drawing divergence based on candle body close, right? Because all oscillators are calculated on the candle body close. Here we have the price making two new highs, and then it's unsupported. We have two new lows in the on balance volume. That's a divergence. On balance volume, it's very effective for regular or reversal divergence. You don't want to use it for hidden divergence. There is no scenario where a lower low in the OBV is bullish, right? You can use hidden divergence for the RSI because it does make sense. Sorry, someone's doing construction in the room next to me. I don't even know if you can hear that, but I can. RSI you can use it for hidden divergence because think about it. Like a lower low in the RSI is what you want because when the price is ready to move, you have more room to run. But I really just avoid using divergence unless you're already comfortable with kind of the rest of your methodologies, right? You don't want to just be a divergence trader. You definitely do not want to be an RSI divergence trader because RSI is bounded. It's going to diverge earlier than the OBV because it has a fixed limit. So that hopefully answers that question about the OBV.
Yeah, and I would say also a general rule of thumb is, OBV, RSI, MACD, you can use them, but it's just a timing tool, basically. It's not the main trigger at all. It's just a timing tool. We have a question from Mohammed. The 834 EMA are gold in terms of interaction with the price, but aren't they considered diagonal support, which shouldn't be as important as horizontal support?
Aren't they considered diagonal? No, I mean, it's a diagonal trend line is about a trend of price, but the moving average is based on the price, right? So aren't they considered diagonal support? I mean, it depends. I mean, a moving average can be diagonal. It can be flat. It can be horizontal, right? And so when you think about moving averages, they're less valuable like here, right? It's an interesting comment. Right here, moving averages aren't really doing much for you because they're all sideways, right? If you think about like a moving average cross, right? So you think about a moving average cross. A moving average cross needs a trend to cross and reverse from. So you take like a longer term moving average, we'll call it like the, I don't know, the MA30 or something. And then you take maybe like an MA10, a shorter term. So if the longer term is trending down, then you get a sharp reversal up. That's valuable because you're getting a cross in a trending market. But if both the 30 and like the 10 are sideways and it starts to cross up, like that doesn't do anything for you, right? A moving average needs a trending market to cross and reverse from. So, moving averages can be a diagonal. They can also be, flat and horizontal. So, in terms of structuring your trade based on them, it can be tricky, which is why I recommend using a nearby horizontal level, as a stop loss, right? For example, if we were looking at the Ethereum trade, and we had talked about this MA200, I mean, you're not just going to short just because it's tagging, the MA200, right? Because you saw where it rejected. But you'd start to look closer and you say, okay, maybe the price will give me something to work with. And if you zoom in, you had an up thrust, right? You had a false bull break. You could use that, right? You have the price establishing a high right here on the 29th. It breaks above it. It comes back below it. Next day, it did a bearish underside, bearish retest. It's called a pullback, a retest of that high, and it rejected. So, moving average, in the same way that a diagonal trend will do, it should alert you to start to look for horizontal structure. And that horizontal structure is what you're going to use to apply your risk. Jimmy, we still there, brother? Can you hear me? Is my audio gone? Folks, can you hear
No.
me?
Your audio is perfectly fine.
Good.
I think this has perfectly answered the question of Mohammed. It's also, I think, like general rule of thumb is like use like MAs or EMAs, whatever you want to use to basically to determine a trend. That's actually rule number one. And in sideways, when there's sideways price action, then it's, well, I would say MAs don't have that much value. Would you agree, right, Jets?
Yeah, that's my point. Yeah, moving average needs a trending market to cross and reverse from.
Yeah.
So, when you think about the context of moving average crosses. So, for example, let's look for a good example here. I'm gonna hide some stuff just to make a better point. We'll take the Bitcoin chart. And we'll take the Bitcoin chart here. So this is interesting. So look at the 8 and the 34. I used the 30 and the 10 earlier in kind of my theoretical example. And maybe even I'll hide the price. I know I can do that somewhere. Maybe just like that, on and off. There's a way to hide the price. I'm not smart enough right now to do it, but that's okay. So let's move the 200. Anyway, so what we have is the run on Bitcoin, right? We have the run in Bitcoin from, here's our bottom in 2020, 678K. And so what we're doing is the price is just accelerating. It's using the 8 EMA as support. And you can look at these consolidations within the uptrend, right? So you take, for example, here, it's consolidating, after the move up, the 8 never crosses the 34, right? Green and yellow. Okay. Yeah. Here as well, 8 never crosses the 34. 8 never crosses 34, never crosses 34. And then boom, here. We finally get the 834 cross. Are we in a trending market? You better believe we're in a trending market.
Yeah.
Okay. So that's a valuable 834 EMA cross. Let's look for an example of a not valuable one. This one's decent. How about this cross? Is this a good cross? Yeah, we're more or less trending down. Even though it's sideways, we have pretty well-defined, descending supply. That's a pretty good cross there, but you often get choppy cross, choppy sideways cross. This one worked out. Generally speaking, maybe I can find a better example of not a good cross. Like in here, we're choppy and it's just sideways. You're getting crosses here in sideways, right? Crosses in sideways markets, right? Crosses in sideways market. So you want a trendy market to cross and reverse from. And what's interesting here is we tried to cross, and then we did cross, but there wasn't much fall through, and it went flattened out, and just moving averages are flat, right? Flat. So any moving average cross in here is useless. Like we're just sideways, right? So moving averages, you have to recognize the market that you're in. Are you trending? Are you not trending? Like a hammer candle, right? It's the same thing with like Japanese candlestick analysis, right? So like a hammer candle, right? So what is a hammer candle? Small real candle body. It's a spinning top, lower shadow, at least 2 times the real body length minimum, right? So if this hammer candle comes after whatever, a bunch of sideways, like what is that? That's not a signal, right? A hammer candle is a reversal signal, but what are you reversing sideways? What is a reverse of sideways? Sideways. So
Yeah.
other than that, if you get your how about you get your hammer candle after that? A move down into a hammer candle. Now, great. Now I have something to reverse. You got to think about whatever signal you're trading on. Is it the right spot for that signal, right? You need a reversal candle, needs a trend to reverse from. Same with the moving average cross.
Guys, I hope this makes sense because this makes totally sense to me. And if you're smart, you would have made notes. I would say give Big Chat a really big like and show your appreciation for all the stuff he's sharing right now. There's also a question about if you're using volume profiles chats from time to time.
I used to use it a long time ago. I really don't, but it's something I've thought about adding from time to time. I really don't, but I think it's a reasonable tool, just like Fibonacci's. Fibonacci levels or even Elliott waves. I think if it works for you, that's great. You want to be an Ichimoku cloud trader, go for it.
Mhm.
But I mean, I haven't used it, from the top down, and if you watch my videos, we pretty much haven't really been caught off guard. You don't really need it, but at least I don't need it with my style, but someone else may with their style. I think it's a very reasonable tool to use. I just don't happen to use it.
Yeah, it's nice for adding confirmation, confluence, the volume profile. But yeah, as you said, like sometimes if you read like the proper price action, then a volume profile is not even needed.
Exactly, exactly. I mean, I just tend to look at price structure, and if a level is well defined, we discussed that 18.2 range. And if a level is well defined, then I'll just use that to structure my risk.
Yeah.
And volume profile is fine. I totally have respect for it.
Yep. Yeah. Yeah, that's totally right. Guys, if you have any questions, drop them in the comments. Drop them in the comments, and we will come back to your questions. I think we're gonna wrap
What's
up
an inside bar, huh? What's an inside bar? It's like when you go to have a drink with your friend and it's inside. Um, what's an inside bar, right? That was the question, Jamie?
Yeah, that was the question.
Yeah, what's an inside bar? An inside bar means, maybe I'll give you an example first here. So we were talking about a little bit earlier, we're talking about the Bitcoin weekly chart, right? So we have a very large candle here this week. I mean, it's pretty ridiculous candle if you look at it, right? And it's got strong volume. The following candle, the range of this following candle is completely contained, right? Within the prior candle. It's called the mother bar, right? Here's the mother bar, the big candle. And then the next candle, that's what I'm looking for. There's the top. Let's try that again. There's the top, more or less. And then there's the bottom, right? And you can see that entire range is inside that candle. So what you look for, oftentimes you look for volume compression, consolidation. You have a big candle and then a smaller candle inside it, and then another one. Wow, if you get a third one, now you have a 3x inside, triple inside. You really want to pay attention to which way that breaks. Okay. There's all sorts of techniques in classical charting. Structuring your trade based on, you could choose this bar. You go short, you go long above that, you go short, below that. So if you go short here, if this breaks, your stop loss is up here. You go long, if that breaks, your stop loss is down there. Inside bars basically means the entire candle is inside the prior candle, and it's reflecting volume compression, volatility compression, and then you watch to see which way that compression breaks, and you use that to structure your risk. That's an inside bar. Outside bar is really the opposite of that. And you think about it as momentum, right? So for example, an outside bar, where's Bitcoin in the daily charts? Outside bar can be, think about like rock, paper, scissors. And an outside bar is like the paper over the rock. It's completely smothering the momentum. And where was it? Like outside bars have played an interesting role in Bitcoin, since June, right? So let's take a look at this outside bar there. Outside bar there. That's an outside bar, right? These outside bars led to a mean reversion or a relief rally. In this case, a lower to upper Bollinger Band move. This is the best example, though. Here, let's get rid of that one. It's not as good an example, although this is an interesting example, too. But we'll look at this one here. So what we have is 3 strong red candles down, right? All of a sudden, so you have an outside bar because this candle is completely eclipsing the prior candle, right? The range of this candle eclipses that. It's like the paper smothering over the rock. What that gives you is a move down, and now we have a spring. We have a false bear break, right? We broke the bottom of this candle, came back, boom, momentum reversal. Now you can go long, right? And then you close outside bar, and you close near the top of the range. So in classical charting, if you close near the high of a session, or if it's in the opposite, if I hit Alt I reverse that, and if it closed down at the bottom of the session, that would be, this would be a red candle. So where it closes in the outside bar is important. It's suggestive of, further momentum. But when you get a big green outside bar after 3-4 candles down, that's like the paper smothering the rock. It's suggestive of momentum reversal. You have all these patterns like 3 outside up, where you have boom, boom, boom. Then you got a candle here, and there's 1, 2, 3 outside, boom, up, right? 3 outside up, outside bar, pushing it back up. So that's inside bar, and that is outside bar. Drinks at the bar and meat. No problem, man. No problem. Appreciate that. Appreciate that, folks. Anybody's listening, go to my YouTube channel, Ched's Trading. I have a playlist called Masterclass Webinars where I go over all that stuff. I talk about inside bars, outside bars, moving averages. You really want to watch these. And, especially if you didn't take notes here, you wish you had taken notes. I think that's where you want to go to get some more information.
Yeah, I think we have smart audience, chats. I think a lot of people, they made notes. And I think a lot of people, they will embed this in their trading journey. And
Yes.
I saw some questions about book recommendations. Well, one book I want to recommend is Trading Wisdom
Thank you.
written by Chet. It's about trading and wisdom. I would say give Big Chet also a follow on Twitter. He's pretty active on Twitter. Your handle is at Big Chats, right? At Big
That's at Big Chats, yeah.
This is his profile. I would say follow him. He's sharing a lot of good stuff. He's really pretty advanced in candlesticks, TA, as you have seen. So do yourself a favor, follow him, and also check out his book. When is the 3rd book coming?
3rd book, Trading Quotes, next 7 to 14 days.
Okay, guys, then I would say order the Trading Wisdom book, and then you have 2-3 weeks to read it, and then you can read his 3rd book.
Well, you can check out, there's a free version of Trading Wisdom on my YouTube. Check out the playlist, wow. Trading Wisdom. I've done 18 of the 50 lessons. I'll eventually do the whole book for free. And this is me reading the book and then talking about the lessons. So you can start with that. But you asked about textbooks. Check out this tweet in front of you. Ched's 2022 textbook recommendations. Classical charting, Richard Schaubacher. Classical charting, right? That's Western technical analysis. Steve Nissen, right? Japanese candlestick charting techniques, Eastern technical analysis. The aforementioned Trading Wisdom by a really handsome gentleman named Ched's.
Yeah.
And then, of course, CMT level 1, which Jimmy and I have both done, which is just for me, it just changed my game. It taught me everything. I would not start with CMT. I would read this book and this book and this book before you go to CMT. What do you think, Jamie? Would you go to CMT straight, or would you read these books first?
I think it could be both ways. Especially CMT level 1 is pretty. It's like the first book of the 3 series of the series. Yeah. It covers a lot, also market correlation and candlesticks, patterns, inflation, interest rates, cycles. but it's pretty advanced, and it's a pretty thick book of 700 pages, if I'm not mistaken.
Yeah.
But you could also do first like the Bible of Technical Analysis, your book, and Steve Nissen's, right? That's his name.
Yeah. Yeah.
Yeah,
Maybe it's pronounced
about
differently, but
candlestick.
yeah.
Yeah.
Yeah. Nice in this, and I don't know, but
Steve
yeah.
Nissen, yeah. So he's the one who brought actually candlestick patterns to the Western world. So, ladies and gentlemen, I want to thank you and give Big Chats a big like, follow him. And if there are any questions, tag me on Twitter or on Discord. Happy to answer your questions. Big Chats, again, thank you very much for showing and sharing your valuable insights. And happy to have you next time.
Thanks a lot. Appreciate it. Love to see what you folks are doing. And I hope everybody has a great holiday season. So, keep hanging in there and keep grinding.
Let's do that. Thank you. Bye-bye, guys.